So what I've started to do over the course of the last 14 years, I mean, I've learned a lot of different things from a lot of different trainers. And Steve Morrow was one of them. But I also actually started trading way before he did with Forex Made Easy and Forex Made Sleazy and all that stuff, right?
Mm-hmm.
So what I've done is I've got kind of a hybrid of the quarters theory and the market makers. So I put the two together, what I've done, because I understand, I learned a lot about that, the daily cycle, which I never really even knew, but I've just incorporated the numbers into what we learned from that. And primarily what I've always thought, at least when I was originally with Morrow, was, all he really concentrated was really on the 15-minute, and it confused a lot of traders because they didn't understand how it was worked in relationship to the 4-hour or the 1 hour,
Mm-hmm.
right?
Right.
And so I don't know if you'd thought that, or why you think, I mean, tell me what it is you think. You think these numbers add a lot of substance to the whole system?
The quarters points?
Yes.
Yes. Yeah, I just, I think I told you it's called I think it was like Forever Blue or some training that I got my hand on that was free. And the guy is a price action trader that uses harmonics, Fibonacci, and quarters theory. So that's when I first actually started learning about the quarters, and it has made a huge difference in my trading. So I think the numbers they are very significant. Like you said, if you consider yourself a price action trader, but I mean, we all see the wicks and the hesitation and, in the market, but if you don't know why, that's happening.
Exactly. You're always behind the 8 ball because you're following indicators, and indicators create their signals based on the movement of the candles within a chart.
Mm-hmm.
And if the movement of the candles within a chart are defined by a price points, you have a significant advantage ahead of time because you know why those patterns form. So I like to call it, this is real price action. This is not fake candle action like all the other guys out there have, right?
Yeah.
So that's just my thoughts.
Before I would, because I use TradingView to do like some markups and stuff, and I would, the way I was taught initially when I first started Forex was to, start on the daily and draw your support and resistance zones and then work your way down to the 1 hour. But now since I've discovered and learned about the quarters theory, I just kind of use those for the support and resistance.
Right. Exactly. Exactly. So it's interesting. I'll just go ahead and start now, but I did this. Can you all see my screen? I've got the group up, our chat group up. Can you guys see that?
Mm-hmm. Yeah.
Okay. So I did this one on the pound yen quite a while ago. Let's see trade plans. Let's see signals. No, where did I do that? Training links. Oh, maybe it was under trade. It was on the pound yen. It was, where was that? Okay. Let's go to it this way. You see my screen? Because now I have our dashboard up. Can you all see you should, well, you probably don't here. Let me make sure I'll do a new share just to make sure. Yeah, you see it. Okay, so this is our Trade Like the Banks. This is our actual members MM4X site, okay? All my students and everybody, their emails are in here. You guys are all welcome to join this. you have to request access, and it's a private group. Then I also have this 100 pips a day Facebook group here, and this is where I post all my stuff. You guys are more than welcome to start posting your examples of things you've done and ask questions and, you know, talk up this board a little bit. Because I got some real surprising things we're going to be announcing here in the next month. And the people that are with me now and with our group now are going to be able to share big time in what I've got developed. I can't really go too much into it right now, but this 100 pips a day Facebook group with over 4,000 members, okay, they're watching. So as my leaders and my, you know, the guys, as you guys, I'm sure you guys have all seen these videos I did. Like this is the one that I did up at the lake when I traded Bitcoin. So you guys are all welcome to be in here, and you're also encouraged to post in here, okay? So, but I did this plan here on the pound yen, and where is that? That was way down here. There it is right here. This one right here. So can everybody see my screen? Can you all see my screen?
Yes, I can.
Okay, thanks. Yeah, if you wouldn't mind moderating for me, then if you can watch the chat. Ben's not going to be here for a little bit, so if you can monitor the chat and help me out. But guys, this is, I talked about this pound yen. This is a trade plan that I created, okay? And I said, okay, on the weekly, you know, with that we have a channel, a bullish channel here, and that we need to watch for this area for a bounce somewhere below this major round number, somewhere around this hesitation zone right here. And this was done about a week ago, actually, right? So right now, so we're looking at this number between 4750 and 1500. So let's go to the software, and we can see that we're at, so this is the daily, right? And so this is the 1500, 147.50. So this has been 1, 2, 3, 4, 5, 6, 7 days now. It's bouncing off this number. It can't close below this hesitation zone. Okay, now remember, when price action drops and it breaks a large quarter point, this next number is great significance, okay, because it acts as a hesitation zone. And you've seen many of my postings when I say, that's why we call it the hesitation zone. This is exactly why when the pair drops and it tries to break this hesitation zone, if it can't close significantly below it, there's a 90% chance that it's going to reverse. Well, our TDI is already fully extended, and you can see today we bounced right off the hesitation zone. Right, or this actually, that was the center point here. I still think this thing's going to go up. I just don't know when. Okay, but one of the things that I think that many traders are getting confused with is that, hey, you know, we're the market makers method. We're supposed to look at it for a 15-minute time frame to enter our trade. You know, we got to, you know, look for perfect M's and W's, right? That's part of it. I mean, that's the whole market maker strategy, right? But when you what I've done is I've coupled the numbers into the strategy. So now we have specific price lines and a gauge or a stop sign, like I would say, okay, that most 99% of the traders out there don't have. And I kind of equate this to, you're driving down the freeway at 100 miles an hour and you don't really know where there might be a reversal. You don't know if there's a intersection here and somebody's going to pull out in front of you and there's no stop sign and they just go across and you smack into them. You don't know. So as you're driving down the road, right? You're looking for signs. You're looking for a reason why there might be an area of that, you know, you don't want to run into a Mack truck, right? So, and that's what price action trading, quote, the gurus out there that trade price action, you know, they talk about, well, if you got a hammer next to a Fibonacci, you know, and the MACD's all lined up, you're trading price action, right? Maybe you got a hammer next to a doji and you're trying to read through the tea leaves and you're saying to yourself, man, or you got your widget board out saying, man, is this really true price action? But it's really subjective because, you know, everybody can interpret it differently, right? A hammer next to a, and it's very complicated price action trading, and that's typically what a trader goes to after 5 years of failure trying to figure out how to trade with indicators. Okay, they go to price action, but they don't understand what real price action trading is all about until I introduced the numbers. Because now you're focusing on the numbers first and the price action second. So what you're really doing is you're trading real price action. So to make a long story short, I put a combination of the last 14 years of things and tools, you know, that I've found that makes sense to me, and I put it together into our system here. So we don't trade just the quarters theory, and we don't trade the market makers method, right? We use those as tools in our toolbox to give us intelligent decisions so that when we're ready to take the trade, all we got to do is push the button. Because now, by pushing the button and you set your candle add-on feature minus to false, what's going to happen is when you push the button, the software is going to calculate. Here, I'll do it. I'll show you. So I'm going to push, this is the demo account. So I'm going to, well, I can't because I can't push the button right yet on this because if I do, this expert advisor will manage the trade also, but that's something we're working on to fix. So, but you push the button and the software is going to manage your trade. I took this trade on the Euro CAD, and let me show, going back on that pound yen, this would have been perfect entry right here at the low of the day. The beautiful second day leg W. It was a great entry. If somebody would have taken it, that would have netted you about 70 some pips. Okay, but I still think that this pound yen pair is going up, so I would be looking for every reason to buy. Okay, now I do have this trade running on the Euro CAD. And I'll open up a Euro CAD chart. By the way, guys, this is a demo, and I'm not, the reason I show you it's a demo is because I'm not, you know, I'm telling you it's a demo because I'm not trying to induce you to buy the software or that you're going to make $1 million with it or anything like that, right? So I use a demo. That's the reason why I use it. And I use a big one because, you know why? Because I want to test out theories. I want to know, okay, if my theory works. So I push the button. And I learned so much more by demo trading. And I get the confidence in myself and my ability. And I'm telling you guys this because that's what you all need. You need to demo and push the button. And get yourself a $100,000 account or as big of an account as, and just have some fun with it. Learn. You know, learn with it, because once you learn and you overcome and you get the confidence in what you're doing, then you can start trading live with real money, and you're not going to close your trades out early. You're going to see that the system works, and you're going to have confidence in your trading. So I took this demo trade on this Euro CAD, okay, because I'm looking at this daily, and I see this big old bearish, you know, AB pattern. Okay, on the daily. The weekly is way overbought. So I'm just having fun, hanging out, pushing the button. So right now, I saw that there was this bearish Gartley here, so I pushed the button, and the software is managing my trade. So I currently have I have these trades running. Software, like I said, software's managing the trade. Whoops. And okay, so big deal. I'm down 33 bucks. You know, I'm just having fun. That's what trading needs to be for you guys. Is you got to start having fun. You know, and you can't start having fun until you give up the attachment to money. And I mean, by giving up your attachment to money, you got to stop thinking that you got to make money with your live account and start practicing with your demo account and have fun. And that's what I really want, is I want to make this fun for everybody. So getting back to what I was saying, okay, what I did is I took what I knew over the last 14 years regarding fractional disparity, things that you need, you know, money management, and I put it into the software. But one of the things today in our chat box, we had a couple of members. I put a little quiz out there. I said, okay, what is this pattern? You know, what is this? You know, is this a half a Batman cord of wood? You know, what kind of entry signal is this? And nobody got it right. A couple people that have been around a while, they knew what it was, but they weren't going to say. They messaged me privately, and that's fine, thank you. But a lot of my members don't understand what it is we're all about and how we need to trade and why we trade the way we trade. So what I wanted to do tonight is kind of go over a little bit and make you guys understand that probably one of the most important things is understanding how the smaller time frames work in conjunction with the larger ones, and why understanding what the entry signals and the trap patterns are, and why they're so important when you take them at the right time of the day. So maybe I can shed some insight to everybody here. Okay, so we can all start being on the same page. So as I said, I had started with, when I first started, it was back in, oh God, 14 years ago, where I traded with a company called Forex made sleazy. And really, it was the first Forex trading software that was out there, and it was a combination of moving averages. And then I went to several other programs, and then ended up with, you know, Steve Morrow's program. And so I've incorporated the numbers. So a lot of what my training is, okay, is still part of everything that I learned. So I'm just telling everybody, I'm not taking credit for any of this stuff. I'm just taking credit for taking little bits and pieces of what I know and putting it together into a system that works. So before anybody, you know, says, oh, that's daily cycle, that's old Steve Morrow stuff, well, I don't think anybody's got a patent on double tops and double bottoms. So I think, like I said, one of the most important things to understand is the entry signals, okay, and the trap patterns. The other thing that's very important, okay, is the daily cycle, because you need to understand how the patterns usually set up and why they set up, and how people come out of the Asian session. That video, my next session, okay, I'm going to go over this. But right now, I'm going to go over the entry signals and the trap patterns. And basically, it's the core of how we enter our trades. So I'll start with this. I'm going to present this, and I'm just going to kind of go through this. View, present. So everybody, I hope everybody can see my screen. If you can, Danielle, can everybody see my screen? Can you see my screen? I've got the entry signals and trap patterns presentation up. Can you see it? Thank you. Thanks, Ben. Okay, so it really kind of starts with, you know, what are trap patterns and what are they really? Well, they're entry signals. Because these trap patterns are what the market makers use to trick you. To us, they're entry signals because we are thinking the opposite of a retail trader. See, retail traders always fall for those fast, spiky candles in the movements because they don't understand what's going on. We're trained. We know that they're there for a reason. They're there to trap you, but for us, we want to enter the trade, take the trade. So everything starts with the daily cycle and how it comes out of the Asian accumulation session and how it usually makes some kind of a push high, makes some kind of reversal, creates a high of the day, and then the real intended trend of the day runs for a period of, most of the night, right, in some form or fashion. So we always got to remember that the trap moves always are made at the beginning of the week, Sunday through Monday, at the beginning of the day, the beginning of the session, the end of the session, the end of the day, and the end of the week. And I'll show you that. So our typical work times start at 1/2 hour before the Asian or the London gap box and 1/2 hour. So there's a 2-hour time period here. This is the area what we call the work time. Okay, and then this is the work area we call the work time for the New York session, 1/2 hour before, 1/2 hour after, 2-hour time frame. This allows us not to have to spend all of our days, 24 hours a day glued to the computer, right? We can come and pick the time that's best for us so we can be ready for the reversals, right? Another example. Now, the best patterns, okay, they take 60 to 90 minutes, up to 2 hours to set up. Now, on a 15-minute time frame, that's between 4 to 8 candles, right? Because each candle is 15 minutes. So it's critical to understand how we're timing our entries based on the start of the gap or start of the sessions, right? And because that's when the money changes hand from, Mr. Asian market maker to Mr. London market maker. And then the Mr. London market maker burns us really good. And then they tell the New York market maker what to do after that. Well, it's not a complete rule 90% of the time, or they don't do it 100% of the time because they did it, if they made it, did this setup here, which is a perfect setup, and this is another perfect setup, but the next day they did a perfect setup here and they just blew right through here. If they did the same thing every day, it'd be too easy, right? So they mix it up on us, right? They mix it up on us. So understanding the right time of the day to enter a trade, what you're looking for, it's very important if you want to have any chance, okay, to beat these guys, right? So any of the other time frames between here and here, we just stay away. We stay out. Our goal is to enter a trade and get our stop loss below the perceived low of the day and above the high of the perceived high of the day and trade back down into the range for at least 50 to 75 pips. I mean, that's what we're all about, okay? So the rest of the times, if you're in the middle of the range, just stay completely away. You should either be here, enter here, or here. Stay out of here, stay out of here, stay out of here, stay out of here. Okay, that's why we have, that's why we have these work times set up for us. Now, there's specific patterns that we want to look for at the right time of the day. And like I said, most of them, the best ones take 60 to 90 minutes, up to 2 hours to set up. Now, there's basically 4 patterns. We've got our M pattern, which is a second leg M or W, an M, or a second leg W pattern. And these ones, if you can wait and have the patience, they're 90% probability that they pay out. But the only way you'll ever believe me is for you to go back through your charts and do a little homework and see for yourself how many times they pay out. Because once you do, I had an engineer, in fact, one of my guys is an engineer. He didn't believe me. So I said, okay, go back and document. Take your pair, take 4 or 5 pairs, and go back for 2 weeks and document every single time and make a little flashcard, document in your journal, in your Excel spreadsheet, which pattern, at what time, and whether it paid out or it didn't, and tell me, what you find. And he came back, he said, I couldn't believe it. you're right. 90% of the time, the patterns pay out. So that's why I'm asking everybody to go back and do this exercise so that you will see for yourself that it pays out, right? So you'll have the discipline to wait, right? So like I said, the basic entry signals for the New York, here's an example of a W pattern. Now this is what I call a cord of wood, where they come down and they shoot down really quick and they pull it down and pull it back. Again, that's a Steve Morrow slang. I'm sorry, but I guess I could call it, I don't know what I could call it, something else. I'd like to come up with something else. But basically, it looks like a bunch of logs stacked sideways cord of wood. There you go. So they pull down and they trap. They pull down and they trap. What happens is the RSI follows the close of the candles, so it doesn't fall for it, right? And it makes a nice cross against the red trade signal line. That would have been an entry, right? Then there's also big W patterns like this that might start here and come up here, big W patterns, right? So these are examples of what we look for these patterns, for these entry signals. Now, we basically have another one that's called what we call a half a Batman, okay? You can call it whatever you want to call it. But that's where they pull down real quick and they pull back. And then they pull down and then they just gently roll it out. This is what's called a half a Batman, right? Here's another example right here, right? Again, unless you go back and identify what these patterns look like by making a couple of flashcards, you'll never remember to see them as they set up, right? So another example of a half a Batman. So then down here, let's see, we have, I've added a few other things, okay, to it, since we have the numbers and we know how powerful these numbers are. Well, here's the pins to the 800 or the large quarter point, right? But you could say, okay, maybe that's a little half a Batman with an extra spike of twist or whatever the hell you want to call it, right? Came down for 50 pips. This wouldn't have been in our typical work time for pairs like the euro dollar, the euro pound, the any pair that doesn't have an Aussie, New Zealand, or a yen cross in it, because any pair like this is the euro yen, so the yen market is open, this would be an acceptable entry to take because of the pair that you're trading, right? But typically we'll want on pairs like pound dollar, the euro dollar, any euro pound Swissy cross, okay, that market opens, so that's when we're really looking for an entry here, okay? So, but this would be a pins to the large quarter point. So here's a simple M, right? Here's a simple M. Here is another one, okay? Now this is what would be called an M pattern. This could be considered an M pattern. I believe this was in this is the London session gap right here, but this is on a 5-minute time frame. This is what it looks like on a 5, and you can use the 5-minute if you want to see it a little clearer, but this is what it looks like here, right? So again, the key is understanding what each one of these patterns are, okay? And if you go through that video, entry signals and trap patterns, you'll know why it's important, okay, that you learn how to identify this, and you get the knowledge to understand and identify exactly what the pattern is, because we only want to trade nameable, recognizable patterns that we have in our training. Does that make sense? Danielle, what's your thought about those? Now you understand the market maker cycle, and you probably have done some flashcards. What's your thought on this?
Okay, I'm here. What I noticed, that's kind of all that I look for are double tops and double bottoms. But a thing that helped me, I know it's hard for a lot of people to see those patterns when, especially if you're new to trading, things like that. Candles just kind of look like candles. But I think once you have the proper training, and like you said, if you do the homework and just go back through the charts. I remember when I first started trading and, learned about the market maker's method. And then I just went back through some charts and I was like, yeah, I see them now. It's just M and W's all over the place. So it's
Do you
kind of
find
all
this?
that I look for now. And another thing that has helped me recognize these patterns is that, I also trade harmonics, and harmonics are just M's and W's when you think about it. So
Yeah, bigger ones, right?
yeah, just
Yeah.
bigger ones. But that has really helped train my eye to find those double tops and double bottoms.
Right, but a true understanding of real price action on a 15-minute for the entry can get you into those big harmonic trades with a lot tighter stop, right?
Yes.
So
Yeah,
it's
I know
kind
a
of
lot of
like a,
people, they struggle. I've talked to a lot of traders, and like you say, most people are just, whether it's the 5-minute or the 15-minute, or they only want to look at the 1 hour, but a lot of people, they just, I don't know, for some reason they have a hard time trying to understand the multiple time frame analysis. So I think a lot of people get confused, when it comes to that. So that's why they say, well, I'm just going to look at this 15-minute chart and go from there. But really tying them all together and seeing the bigger picture is what you want to do.
yeah, exactly. So when you first started, okay, you did start making flashcards and you did a little bit of homework, right? Did that help you?
Yes, it helped. It helps a lot. Because I've always, I'm sure all the traders here, the market is just, they like to form patterns and it repeats itself. And that's true. But a lot of people don't know what those patterns are. So
Right.
once you figure out what those patterns are, and then you take the time to actually go back and, go through some pairs that you like you said, pick a couple of pairs and just go back through the charts, and, you'll see those patterns start to jump out.
Right. Exactly. My point exactly. Well, thank you. Appreciate that.
Mm-hmm.
Okay, so again, there's lots of examples in here of what it is. There's the W pattern. Okay, here's an example of a bigger W. You have to be able to expand your mind a little bit also, and I think it just comes with experience by pushing the button. And that's why I suggest everybody just use your demo account. Don't, just push the button. Whether you're right or you're wrong, just live with what happens, but let the software manage your trade. And just get some confidence in it. Doesn't matter if you win or if you lose. What matters is that you learn, right? And how do you learn? Well, you learn with a demo account. So and I will tell you guys from the bottom of my heart, okay, that I spent almost 8 years refusing to demo trade because I wanted to make money. And I lost, over $100,000 because I was stubborn. I couldn't give up my greed, And I know a lot of you have that same issue. So I'm just telling you guys, the more you demo, I wish I would have had somebody with a hammer, or my wife would have actually been standing over my shoulder saying, why in the hell don't you demo trade, right? I probably would have done it more, but I didn't, right? So demo trade is what you guys need to do. You need to do it as much as you can. You need to look for these setups. And even if you don't make a flashcard, if you think you see something setting up based off what you see, push the button and let the software manage your trade and let it run and see what you get out of it, okay? This is what's called a multi-session W, where the previous day that it comes down and it makes a strong movement, okay? The next day, they come down and they make another movement, okay, just above the low of the previous day. This is what's called a big multi-session W, or we call this a safe trade. Now, you'll find this typically will happen, okay, maybe Tuesday or Wednesday, where if you look at that, like I said, if you go back and you look at this cycle up here, back up here, the cycle, okay, what we might end up having is Sunday or Monday, the first 4 to 8 4-hour candles, okay, they're going to create their trap pattern, and then they'll usually come out Monday and Tuesday, and this set the initial high of the week, and then they'll go Thursday, Friday, Thursday, Friday, maybe end the day Friday here, and then pull up and start the next Sunday here. And if you watch that video on the weekly cycle, okay, you'll understand how they mix it up. But with a safe trade, what happens is usually there's 3 or 4 days of drop, and then they come down on the first day and they make the first leg here. On the second day, they make the second leg here. And that's exactly what this is all the way down here, which is called the multi-session, let's see here, the safe trade. Okay. What's that at? This one right here. Okay. So this would be, probably 2 days of drop, 3 days of drop. They ended the week, or in the middle of the week, they reversed it, and they rose for 2 or 3 days. So understanding the weekly cycle is an important thing. It's for you guys to go back and see where they did that, okay, and make a flashcard of it is important, so you remember to watch for it, right? So then there's what's called the one leg in the box and one leg out of the box. So out of the Asian session, they make the first leg. Then they come back down there and start of the London session and the gap, and they make their second leg. There's a big fat W. This is called one leg in the box and one leg out of the box. Here's another example. Boom. Boom. Right? This is what we call sorry, Kaizen, I had to mute you because, so this is what's called a V bottom or a V top. Now, these are very hard to catch, and we suggest that you stay away from them, right? Unless you have a lot of experience, right? This is what we call a railroad track, where they pull down really quick, hold the level, and then they just, make 2 bars like this, and away they go. This is also a little bit more difficult to catch, but you know what? If you got the numbers, it's really not. If you push the button, then you know that when you push the button, the software is going to manage your trade, and the first 25% of your 2% risk is the only thing that you've got at risk. But if you're right, the software will scale in, and you'll have your winners will always be much larger than your losers. Okay. This is what's another example of cord of wood. Okay, examples of cords of woods. But here's an example of the half of Batman. These are all nameable patterns that if you can learn to identify, you'll have a much greater degree of probability, because you'll understand, you've got some rules, right? Rules, you got to have rules, right? 60 to 90 minutes, up to 2 hours. Second leg, M or W. The right time of the day. These are all rules that if we live by, okay, we increase the law of probabilities on our side to have a winning trade. And when we get really good at it, we can wait for the dealer to lay his cards out on the table. Like we're playing poker, right? Everybody knows how you bluff, right? Well, you can't really bluff in Forex, but what you can do is you don't have to put your money down on the table until you got 4 aces, right? Or you got a full straight. And then you could load You can put as much money on the table as you want depending on your risk tolerance, right? So, you know, we want to stack the deck against the dealer. So we need to pretend, you know, we got to understand what he's doing, why he's doing it, and how we can trade with him so we have the highest probability of success, right? So understanding how these smaller time frames fit into the larger time frames, okay, and the rest of our training, okay. Then I'll go to our member site here now, and we'll log in here, and you understand now how to enter a trade, okay? And I have all of my training that's in here: the daily cycle, the weekly cycle, entry signals and trap patterns, the intraday trend. You need to understand, what is the intraday trend? How do I know when to get out of a trade during the day? Anybody ever get into a trade and you've got a good entry, but then you didn't realize that you had a good entry, and you tried to get your stop to break even, but they came back because you didn't get a really good entry. You got an entry that was maybe 20 pips too late, and then they pull up and they come back and stop you out, right? And you think, oh God, I'm so happy I just made that perfect entry. But guess what? They came back and stopped me out, and I was so tired, right? I woke up and the pair shot up 2 more levels, and I missed out on that trade, right? Well, if you don't understand the intraday trend and why they do that, okay, then you won't be able to hang with them. So understanding the intraday trend. The strike zone is more of a detailed, comprehensive video on how to use the entry signals in that. These are, you know, the Gartleys, how to use Gartleys as an alert, right? So, and that, I still got to get that changed over. But so you need to know how to enter a trade, but then you also need to know, okay, how do you look for trades, right? How do we look for trades? Well, I mean, I can go and make these webinars till the cows come home, and I've done at least 9 of them on how to look for a trade. It always starts with looking at the daily, then the weekly, drilling it down to the 4-hour, looking for the overextended TDI on a 4-hour or a daily time frame, step number 1. Step number 2, look at this next number in the sequence of events, step number 3. Okay, drop down to the 15-minute and enter your trade, okay? So, you know, it's kind of a 2-step thing. You got to know how to look for trades, and you got to understand how to enter a trade, right? So that's pretty much what I've got for this webinar at this point. Ben, first off, does anybody have any questions on what it is I just talked about? After this, okay, Ben will kind of go through kind of a market check down for us, right? Okay, so any questions on what I was just talking about? Anybody? Anybody want to come on and say anything? Okay, Ben. So are you ready to come on? I know you just went and got your dinner, and
yeah, no, I'm ready. I didn't cook it yet. I figured.
Okay, I know. I got my turkey in the oven, and I got to go check it. So.
There's no reason to cook it yet. I don't want to be sitting here,
yeah,
doing this and having food falling out of my mouth. Never
got
a good look.
Okay, so go ahead, and why don't you share your screen?
All right, give me a second here.
So anyways, let's see here. Just an update. Okay, we're working on the Rocket Chat soon. Okay, we're all going to have access to it. and we're going to be moving out of Telegram, and everything we're going to be doing is in here soon. We're just having issues getting the push notifications to work correctly. And so once we get that in, we're going to be moving out of Telegram in here. We're going to have everything in here. And I'll just tell you guys, I have some plans in the work that's going to make this program very sought after and very expensive within the next month and a half, because it's going to be worth it. And so I'm telling everybody that will listen to this video, and honestly, I'm not going to call anybody out, okay, guys, but the last webinar that we did, okay, was with Ben Monday night or Sunday night, right? And I made the video, and we have had 22 people out of 128 that even watched the video. I don't know why. I don't know why. But all I can say is that when I attach the new, when I get the new thing attached to the okay, I'm calling it the robot. I'm calling it the motor. I'm calling it the engine. We're going to have so many people want it. And you guys are going to, first off, you guys are going to be, you're not going to pay any more for it than what you're paying right now, number one. And number two, the people that step up and want to help me are going to have a very special incentive. Okay? I'll just leave it at that.
All right, I'm ready whenever you are, Captain.
Okay, thank you, buddy. So go ahead. Should I just stop my share, or do you want to just...
I think you have to stop your share for me to share.
Got it.
Yep, there we go. All right. Did you already, I'm guessing you already ran through the little disclaimer and everything since you've been going for a little while?
No, but go ahead and go to the disclaimer, and then I'll cut it and add it to the front of the video.
Boy, boy, boy.
I'll mute my mic.
All right, you guys. It's what is it? Thursday? Yeah, Thursday the 22nd. It's me, Ben. So you guys see that we're going to be doing things a little bit differently. We're actually going to be doing some training first, and then we'll, take a look at what we got going on. Too bad we weren't paying attention. Could have caught this here. But before we get started, just remember, guys, when you're trading Forex, it does come with a risk. When you increase your leverage, you would also increase that risk, and that MM4X is not responsible for any losses while using our system or software. You guys are trading at your own risk, and this information is for educational purposes only. Okay, so I'm not gonna bore you guys with a long, drawn-out overview here. We'll just take a look and see what we might have setting up for maybe mid-Asian, maybe London, maybe something to look forward to for New York Open. I might as well look at the pound Aussie since I have it open. That's a pretty good setup here. We actually sold this here last night. This was the sell signal. It went for a decent amount of pips. It slammed through take profit 1. I think I took take profit like a total of 70 pips after I noticed that it had pinned the 800 EMA and did not close beneath it. Actually probably could have turned around and at that point bought it and still been riding it. But that was pretty late / early in the morning, and I was starting to get a little tired, so I just took my profit and ran away, which I guess was a good thing. All right. On the daily, again, like I said, guys, it's in one of those spots, It's right in the middle of the channel here. We do have a bearish classic Gartley on it. However, just remember that this thing can still go up. Pound strong right now. It can go up another 100 pips, 110 pips, and this Gartley is still going to be valid. We have but for me, looking at this and looking at the TDI, how it's already overextended, right? Already pushing 68, and how this is already overextended. If I was looking right here, I mean, yeah, this would have been a nice little buy, I guess, when it came back and pinned the 50, almost pinned the 200. But I might not have taken it based on, well, one, we have some divergence, and two, this is way up here, right? So they could be just pushing price up here, right? And then we're going to get some Asian accumulation, and maybe they make one more push up to the high, right? And then they could just drop the floor, trapping all these people that just jumped into this buy. But for me, the TDI right now does not say buy, right, on the daily or the 15-minute. I mean, the 4-hour, yeah, we crossed the market sentiment, but you see it did not cross the signal line. It kind of flattened out. Excuse my sniffling. It's pretty damn cold out there. We're getting an ice storm on top of 7 inches of snow, so that should make for a pretty fun weekend. So overall, my personal, what I'm looking for, and I'll show you guys, because I get the idea that some think this is just like a prediction, like I'm rubbing a crystal ball or something, but you guys need to understand that the market repeats itself, right? So if you start to pick up on patterns at certain numbers and levels, you can catch it going up and down. So I'm just going to show you guys what I'm personally looking for. And I'm going to show you on the 1-hour time frame, okay? What I'm looking for, number one, is I do want to see it come up a little bit higher, maybe another 50 pips, okay? Because I want this TDI to be overextended, over the 68, hopefully creeping out of the volatility band, okay? Then I want to see it make one of our patterns. If it makes one of our patterns, maybe we have some more divergence and we have a good hook. I, myself, am looking to sell that Gartley, but that doesn't mean that I'm just going to not buy it if it shows me a buy pattern, right? But I mean, because going on the 4-hour, yeah, we were on an uptrend, okay, and then it's really just been, I mean, that's a wide range, but you can see it's just been kind of stuck right here. And last time it was at this level, it was stuck, and then ended up going down, right? Came back up. Hasn't broken. This is what I mean about the market repeating itself, guys. Look at, okay, we have 1.8, major round number, right? Last time that GA tried to break this, it couldn't, and it shot it down, okay? Comes back up. Couldn't break it. So is it shooting it down? Are we getting a repeat? Maybe it's going to come down a little bit and try to blast its way through. Just something for you guys to think about. I'm not going to ramble on too long here. But for me, I am really looking at a possible sell on this pair later. All right, so we started with the GA. AU. They had a nice buy setup. I think it was last night or early this morning. I was having some issues, and I wasn't able to be on as much as I wanted to. The daily, I mean, it looks like to me like we might be seeing a big W right here. Okay, TDI looks like it might be making a big W. We have a nice like a sideways W right and across on the 15-minute, but we're still trading right now. We're trading below the moving average. And I mean, AUD and the dollar are pretty even here. I would like to see a buy here, but I wouldn't just buy it right now, okay? I want, at the very least, this to start hooking up on the daily, okay? 4 hour, same thing if you just look at it. Look at this big W, okay? Right here would have been just a perfect entry, okay? If you imagine a little line right there, held the level, okay? Didn't make it too far past the hesitation, and we had a hook and a cross. Could have got right in there. Tight stop loss, straight profit.
Yeah,
But
Ben, can I say something, Ben, here, real quick?
of course.
Okay. First off, I want to show people, okay, how to set up their charts and how to clean up their charts, because I'm not picking on you or anything. I'm just using this as an exercise. Okay. So the first thing, you know, if you let me share your let me request share. So request remote control. Okay. So the first thing I would do is close this guy out, you know, your trade station, and then I would take this little guy right here and drag him over there, so you can expand your charts, so you can see much more clear what you're looking at, right? And then I'd go like that, tile vertically. Okay. So when you're flipping through your profiles, you get to see all the information. You can also, by doing that, you can give a little bit more recognition to your TDI. If you get used to scrunching the TDI up like that, okay, you don't really pay attention as much to what's important, the significant things like, you know, the green cross over the red trade signal line. That's an entry signal. Yeah, that entry signal, okay, came because of this W pattern right there, right? So you can see the TDI already had a cross before the second leg was confirmed. So this would have been how you would use a TDI, but if you have it all scrunched up, you're not going to pay attention to this critical element right there, okay? So that's pretty much all I wanted to say. Carry on. Ben? Oh, Ben, you there?
Yeah, I'm here.
Okay.
I think.
And the other thing, yeah, and
control.
the other thing that I wanted to say, guys, okay, we don't have to, if you guys want to pick 12 pairs that you want us to follow, I know, you know, some guys don't want to trade the Aussie or the New Zealand, but what I'd like to do, okay, is trade the pairs that the majority of the people want, and then we will set up our review, okay, based off of those pairs. So, Ben, as you go ahead with your, you know, what you wanted to talk about, okay, if everybody wouldn't mind, okay, in the chat box while we're doing this, okay, just type in there what pairs you like to follow, like the GJ, EJ, you know, just make a list of them, type them all in one list. Don't just say, you know, post you know, 5 different posts, but I want to keep track, and we will start our market check down review that we do on Sunday and Wednesday nights, okay, on the pairs you guys want, all right? So everybody make sure you type in the chat box for me which pairs that you would want. Go ahead, Ben.
Yeah, I'm 100% fine with that too. I mean, I can trade any pair. I mean, it's all Forex to me. It doesn't matter which pairs we go over, honestly. So whatever you guys like, if there's something we're not, then yeah,
Well,
let's start getting a list compiled. I agree.
And if you guys don't take the time to do it for me, okay, I think you're sleeping, and I'm really going to be disappointed in you guys. Okay.
So with AU, yeah, it's pushing up. I myself wouldn't jump into it yet because that's exactly what they want you to do. I mean, this is well known as the Asian accumulation, right? This to me this isn't any of our patterns we look for here. Yeah, we had you know, this hesitation zone here, this quarter point didn't break it. We had confirmation there. AUD has some strength, but you know, this can change at a blink of an eye, right? Our heat signatures are still showing us that, you know, it's undecided. We have some sell, strong buy on the smaller time frames and buy on the larger time frame. I do like what I see here. This pretty much matches up with the daily, this big W. What I am going to be looking for, I want to basically just see this start to rest a little bit. Coming out of Asian, I'd like to see it come down and maybe make like a W or do like a quarter wood, right? Something like that, or a half a Batman and then take it up. If I see that happen, then I will be looking to buy at that point. If I don't see it happen and it shows me that they're going to sell it, hell, I'll sell it, right? You have to be able to go both ways, guys. Well, EG did call a sell signal on this up here. It did hit my trail during one of these two spikes here. If you just left your stop at break even, you should technically still be in this sell. It's still moving down. It's moving like a snail, but it's still moving down. I mean, we're getting lower highs, right? Lower highs. This is on the daily, so it's still showing that it's a down move. TDI is a little bit flat at the market sentiment right now. We are trading below all the EMAs on the 15-minute, which rule of thumb, if we're trading below the 800 on the 15-minute, we only look for sells, right? This would have been, well, that's just nonsense right there. That's just manipulation. But, you know, we had a half of a Batman on the TDI right here. But if we would have got in on that, I mean, at 50 pip stop, you would have been okay. But, yeah. So I think that was during the news last night. Overall, I'm still pretty bearish on EG. I agree with Yen. I do see GJ still has potential to rise. If GJ is rising, normally EG is falling. This is my area of interest, 87.5. You can see, and this is another, like I said, the market repeats itself, right? If you look how many times, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I mean, it's multiple hits to this 87.5. So this is obviously a very, very important level, okay? Since I'm not in this, if I find another opportunity to go short, I probably will. And I will look at it again when it gets down to this area. So these really are predictions, guys. These are simply doing your homework, studying, learning the patterns, learning the market behavior, and once you start to get all that down, everything will be so much clearer for you. Let's take a look at the 4 hour. 4 hours pretty choppy. We've got, going up. This is starting to go down. It's going down. But it's not really making any significant movement. If you look on the 15-minute, it's just been kind of stuck here. So it might be slowing down for the week. I think there might be some pound news tonight, so maybe that'll kickstart it a little bit. Okay, EJ, extremely, I think that's on the 4 hour. Yeah, those are on the 4 hours. Let me erase those for just a second. I can always put those back on later. All right, EJ on the daily. We have been discussing this area here for like 2 weeks, okay? And it is finally almost there. I've been sitting on my hands waiting for this damn thing to get down here, okay? Once it kicked me out of my cell, I just decided to wait just to see. So I'm betting you guys can guess what I'm looking at doing, okay? We are extremely, well, not extremely, but we're oversold on the daily, okay? It came out, went back in, came back out, right? I would like to see one more push down, okay? One more push down to this quarter point and the bottom of the channel. And then I'm going to take that with the Gartley pattern. That's going to give me 3 levels of confirmation. As long as I have some good confirmation from the TDI, that's going to give me 4. That's going to give me 4 confirmations to take this buy. Granted that the euro isn't like a 0.1 or something to where it's completely dead with no heartbeat. Well, I will not be looking at doing this now, nor will I be looking at doing this right after the Asian session. I'll probably be looking at hopefully the London action to give me this drop that I want. And then, yeah, that could be, we have a potential, I mean, this bad boy, no telling how high it could go afterwards. But on the other side of the coin, if it breaks and it retests, it could be, you know, making a whole new trend here, right? So all I'm saying, guys, is keep your eyes out. If all of my confirmations line up, I will issue a signal on it. Euro NZD, finally. Patience. Been in this trade all week long. And this is very unusual for Euro NZD right here to do what it did, okay? We had a 75 pip stop loss, and it managed to stay from our entry down and not touch our stop loss. It managed to stay in that little range all week long. But I figured, you know, as long as it didn't hit the stop loss, I was not getting out of the trade. Now, you look, guys, you see this, I drew this on here the other day, right? So you see what happened. Price went up, hit it, couldn't break it. Went up, hit it. Went up, hit it. At the same time, it was bouncing off this other level coming from down here. And it was bouncing off the center point. So it's bouncing, breaks, retests, straight up. Where do I think it's going? At least here. Look where all this action is. At least here. Breaks there. Well, then it's going here. Breaks there. Probably go up in here. So I am not closing this. Everyone should at least have their stop loss. I think I closed out one of my positions. At this point, you should at least have your stop loss in profit enough to cover the spread. Okay. Yeah, getting our butts kicked in swap fees a little bit, but even with the swap fees, overall positive on some positions I have on another account. So that's good. I mean, it shows that, you know, sometimes you have to sit on your hands and let the market do what it's going to do, right? Let the trade develop. It developed, figured out its direction. TDI finally popped. There she goes. And it looks like it's getting pretty close. 168.480, I believe, is take profit 1. So I would imagine that it's probably going to hit that in the next 15-minute candle or so. So obviously my directional bias for Euro NZD is a buy, if I must say it, since we've been in a buy all week. But that's good. We haven't lost a signal, you know, for been a little while. Signals have been doing very, very good. Yen guy called an awesome UJ buy.
For the ones that take them, I might say, the ones that take them.
Yeah,
you know.
yeah. I mean, for whoever's taking the signals, you know, they've been pretty legit. I mean, honestly, signals, you guys are just a way for you guys to earn a little bit of extra money while you're learning. I mean, they're part of your subscription. So if you don't really trust signals, maybe take it with a 0.01 and just see how it does. Never know. You don't really know what you're missing because...
Or take it in a demo trade. Just push the button. All you got to do is push the freaking button.
Yeah, or that, because we've been dishing out, and I'm going to be posting results for this month. You guys are going to see that our signals have been kicking out a buttload of pips. And because if it's pride or whatever it is, you're not taking them, sorry, but you're missing out. That's all I got to say. I mean, I'm not trying to sound like a jerk or anything, but, you know, I stay up, you know, 12, 18, 15 hours a day, you know, just to find signals. And then if you don't want to take them, that's fine. That's everyone's, you know, you make your own decisions, I suppose. All right. EU.
Again, guys, I'm not seeing any nobody's typing in the chat box. What the hell's going on out there? You guys in the dead zone or what?
They all put me on mute and walked away from their computers. Okay, well, I only got a few pairs left anyways, so I guess
well, the thing is, they got a choice. Okay, they can spend $150, $175 a month and learn how to trade, or they can spend $500 a month and we'll push the button for you. That's what's coming. So it's your choice, guys. Go ahead.
Okay. Where was that? All right, EU. So to me, EU, I mean, it's been coming down most of the week, right? TDI is only at a 50, okay? So it's not really attractive either which way for me right now. Since New York, it's just gone sideways, right? We do have a little bit of bearish divergence, right? It did drop a little bit. It's kind of hugging the 50 and the 200 right now, but it's below the 8, okay? I personally don't want anything to do with EU right now until it either gets here or it gets, you know, down in here. This is one of those things where I will sit on my hands and I will wait for it to get where I want it to go before I take the trade. You know, discipline, guys. Discipline will make you or break you. And trust me, I know I've broken myself numbers of times. But let's check it out on a 4-hour and see if that's telling us a different story here. Okay, couple opportunities I'm seeing. We had this area here where it crossed. You could have got in. You would have had a little bit of drawdown, but if you just used the standard 50 pip stop, you would have been okay. Could have had a nice run. You could have exited right there, right? I probably wouldn't have, you know, because by then you just have your stop loss at break even, right? Here, when it crossed over and it came back in the channel, in the MM4X channel, right? And it retested the top of the channel and started to drop and started showing separation. At that point, I probably would have took most of my profit off the table and maybe just, you know, left a 0.01 or a 0.03 and let it run, because then it probably would have obviously came all the way back down. Presented another opportunity, came down to the center point, didn't quite break it, didn't even quite make it, but you see all the congestion it had. It basically, to me, it retested this old consolidation area, because this bottom is lining up with these tops. This bottom is lining up with these tops. So it couldn't break back down into this level. This is almost, and you can correct me if I'm wrong, Joe, but this is almost what you would call an institutional order block, okay? They didn't want price to get back down and here where all these orders are sitting for some reason, right? Maybe they have a lot of people that went short during these pushes down. Maybe.
Expand your chart a little bit and see what number is below that large quarter point.
Oh, man, don't go there.
What is that called? That's a hesitation zone.
That's why we call it a hesitation zone. I knew you were going to do that. God.
Well, what, you didn't remember it or what?
No, I'm trying to give, I'm just trying to throw some different stuff. I just want to get these guys thinking a little bit.
Well, here's the thing they need to think about. There's a reason why we have these numbers.
That's true.
These numbers are there for stop signs. You got to learn how to read the signs. You guys have something 99% of all Forex traders don't have. It's what you do with it is going to determine your success in life. So
exactly.
When the pair is dropping and it breaks a large quarter point, guess what? That next number 90% of the time is going to reverse, and it reverses big time. And look how many pips that trade would have gotten had paid attention to that silly little hesitation zone below the large quarter point. Expand that chart to the full size, please. Expand it, and then scroll over. Scroll not there. The other one. Click the other button. Now scroll the chart all the way to that time frame right there. Now, so that you don't see what happened afterwards, but right there. No, back. Just so you see where it broke right there. No, back. Just
right
a little.
Here?
Yeah. Hide that rise. So you're looking at, go up a little more.
Good.
Okay. So looking at that chart right there, and you're looking at the large quarter point, and you're looking at the last time that it came down to the hesitation zone, what would you think at that point? Well, guess what? There's a reason why they call it the hesitation zone. If you were prepared and you saw it, and if you had expanded your TDI out a little bit further, so you can look at what the, hey, here's the thing. You don't know what you don't know.
That's right.
You know?
And look at that. The market repeated itself when it came down to that area.
And look at your TDI. It's showing a hidden bullish divergence right there at the same point, right there, right at that, that time frame. That's what you...
Oh, yeah, this time frame, yeah.
Yeah. So what does that tell you, guys? That's your instruments in your airplane. And I still am not seeing anybody type in the chat box what currency pairs. Maybe you don't, maybe you're happy. I'll tell you what, I guess that means that you're happy with what we do. So I won't be accused by somebody that, the way I train is not good. Like I had two people tell me they don't like the way I train or the way we train. They would do other things, but they wouldn't give me an answer of what to do. So
yeah, I wasn't too excited about that either, but moving on.
We work hard for you guys. We're trying. But anyways, the hesitation zone, it comes down, breaks the large quarter point. It can't break, and you know what the hesitation zone does. So go ahead.
Yep. And then when I didn't break it here, it shot it right up to not only the center point, but to the top of the channel. Okay. And then the center point, we're just going to say that because it closed beneath it, shot it away. Okay. Eventually made back down to this quarter point here. Didn't break the hesitation, came back up. So what should we be looking for? Me personally, I guess, I would sit on my hands, like I said, and either wait for it to come back up here, maybe to this hesitation zone, right? You see what happens when it came up here, right? It hasn't had very good luck really getting past this area, okay? So I would like to either A, see it come up here, and see what it does, or B, wait for it to come back down and see if it can break the hesitation zone. So for EU, I am currently sitting on my hands and being patient, because I've learned that that tends to pay off a lot better than just trading just to trade. GA we already looked at. GJ, let me do all this stuff, make the captain happy here. Give me 1 second. Bring that up. Bring that up. All right. GJ, you guys, this is why I feel like it still has room to go up, okay? I'm going to bring this up. This area has been pretty touchy, okay? This week, it didn't break the hesitation zone, but then it, couldn't really get above this zone here either, okay? So now it's just it's just moving sideways. But to me, this doesn't say sell right now. Yeah, the market baseline's pointing down. Yes, the TDI is hooking down, but we're at a freaking 32. Okay? That's like jumping into a pool of lava.
Right. And guys, remember, look at that. There's over 750 pips to the upside. Don't you think that we could wait for the pair to show us what it's doing and maybe take 250 or 500 pips out of it, right?
I mean, that's basically what I was getting ready to say. I mean, we've got this first leg down. We've got the center of it. This could potentially be a W forming right on this point or this point. And if the TDI gives us added confirmation, if this TDI hooks down again and then starts to hook up and we haven't really broken this area, you damn skippy hippie, I'm looking for a buy. But I'm not going to just jump in a sell because it's already, dropped 15,000 pips. I mean, this is not the right time to get into a sell after all this. This would have been the right time, or this, right? But in my opinion, and this is, like I said, this is just me, this is not the right time to jump into a sell. Not right here. So overall, again, GJ, I would like to see coming out of Asian, because, I mean, right here, you could have jumped in and, grabbed a quick scalp, right? Could have got a quick, 25 pips, 25 pip and dip. Could have got it, okay? I'm looking at GJ, just kind of bouncing around. I'd like to see this overall Asian range stay under 50 pips, okay? I would like to see it push. I'd like to see another push coming out of Asian, okay? Either to this point or these points. If I can get it to here and it closes above this or closes above this, and I got some confirmation, more confirmation here, like maybe this is pointed up a little bit better, I would definitely be in the mood for a buy at that point. And then I'll just be looking on the 15-minute, hopefully that if it pushes out of Asian, it'll bring the TDI down, and then it'll give us a little entry signal. So I'm gonna rub my crystal ball on that one and see if we can't make that happen. All right, GU, I honestly haven't looked at since the last time we did a webinar. And it doesn't look like to me like GU's done much of anything today. Yeah, I had a quick rise. I kind of feel sorry for the people that didn't get out up here. If you bought it, they probably got, yeah, it just doesn't look exciting at all to me. Way too close to the 800 EMA, in my opinion, to be buying. I mean, yeah, it came out of New York. But when it came out of New York, it was already up above 68, right? Nothing about this says buy. Granted, it didn't break this area here. Yes, it's above the 50, but it's below the 800. What's the rule of thumb? Below the 800 on the 15-minute, we're looking for sells, okay? 4 hour, again, it gave it a little bit of a push, right? It does look like there's a little something going on here, okay? TDI is starting to hook back to the downside on the 4-hour. I am definitely not, which is good because, you know, GU is the driver of the pound pairs, but UJ is the driver of the yen pairs, so that helps out with a GJ, but I don't want to get sidetracked here. The daily, we're at 50. We are below the, you know, market baseline. We had a bullish Gartley that did, you know, play out pretty nice. Didn't make it past, right? Dropped it back down, trading below 140 again, major round number, pretty good psychological level. But the TDI to me just isn't showing me much on the daily. So probably for the rest of this week, you know, I mean, it is Thursday. For the rest of this week, I don't know if I'm going to be trading GU unless it just presents me with something I absolutely cannot pass up.
I do think we're going to see the pound yen rise tonight, so watch for that.
That's exactly what I was saying. I just said that I want to see it, you know, maybe come down out of the Asian session, you know, a couple quick pushes to the low, get some people involved in some sells, take it sideways for, you know, an hour or so, and then off to the races we go. So, yep, I will be up tonight. I will be up on my charts, and I will be watching for it. It's just amazing how price just stays, okay? NU is really not my favorite pair, and I've said that for a while, and this is one of the reasons why. I mean, look even on the weekly time frame, how little movement we've had here, okay? TDI is very overextended. It did hook out, but it didn't hook out of the band, but, you know, it's out there. But we didn't get much of a cross there. That's on the weekly, you know. Look at the daily, okay? Again, the daily, it's chopping, right? It can't break this level, right? And it can't seem to break this level. So it's just, if you're a scalper, this is probably a scalper's paradise. But for me, it's just not for me. Coming out of New York, they shot it up, probably trapped some people, and then they just dropped it all day long. Just dropped it, okay? And do the same thing over here, right? They shot it up. I think this was a FOMC. Shot it up, pulled back, brought it back up, said, nope, you're not getting out, drop. Took a bunch of people's money. Dirty. This pair has been dirty this week. I'm not trading it. Not trading NU this week. TDI is still pointing down. We had a bearish 5.0 pattern. Looks like it did actually play out a little bit. I will revisit NU when it gets here. And if I don't see it and it breaks that, I'll be looking for it when it gets down here. That's all I got to say about NU. I don't like those kinds of moves, man. It's so dirty.
Now, however, the NU, if you're trading the pound New Zealand or the euro New Zealand or anything New Zealand, okay, the New Zealand dollar is the driver for those other pairs. So just keep that in mind.
Yes, yes, yes. I mean, I'll look at it, but I just don't like the way it's been moving. It's been doing some very, very dirty moves. Well, anyone else have that big-ass gap? Whew, that CAD news this morning. Weak news for CAD and good news for the dollar at the same time, and that's what happens. I'm a little upset on that. Would have been a nice buy, but at the same time, they would have brought it right back down and took it away, okay? UCAD does have, I think, the potential to continue to the upside. Is it in a position to buy right now? For me, no, it's not. I wouldn't mind seeing, you know, maybe one more pullback to this hesitation right here, this quarter point here. I wouldn't mind seeing one more pullback to this area. You know, so maybe like a Tuesday or something. Maybe look at it again. Probably look at it Sunday, and then check again Monday and see where it's at. But this is where I want to see it go. I'm not interested in buying UCAD right now with how over bought it already is. And you know, you don't buy high and sell low. That's not really how it works. Kind of want to do the opposite. Even on the 4 hour, you know, it came up to the center point, couldn't break it, right? TDI crossed, and it was actually, you can already see the divergence here, okay? You see how price, you guys, is going up, how sharp it's going up? Look at the momentum. Look at the momentum. Look at the momentum from right here, okay? These two candles here, you see how price just shot almost straight up, okay? Minus this little dip here, but it shot straight up. Look at this. This is basically going sideways. And then it started hooking down, okay, right here. So that just gives me more confirmation, if you will, that I want to see another pullback into this area here. And then I might be interested in looking at UCAD for a long trade. UF, I'm about just toss in the garbage altogether. It moves, but it doesn't move. Okay, it's the daily. You know, it's been a little.
It's a big help when you put it next to the dollar yen. So if you're trading the dollar yen, and the dollar Swissy is going to also follow. So that is a confirmation you could use if you're trading the dollar yen. And of course, when the dollar yen drops, so does all the other yen pairs. Just like
right. And I love trading the dollar yen, so I trade it quite a bit. Looks like we got a pretty strong dollar going right now. NZD's weak, so that should be good for our Euro NZD trade. I'm betting you that his hit take profit won. But for dollar Swissy, I mean, we do have some obvious divergence, but it's just like UJ, it hasn't made up its mind yet. So, I mean, this is one that I'll watch it, but to me, this isn't very, it's just not very appealing to me. I mean, yeah, you could buy here, sell here, buy here, hopefully you don't get stopped out, you know, sell here. So where do you think it's going next? Well, I'd say it's going down here. Just because how it's been moving, right? But we never know. Just have to wait and see. Trading below the 50, we're trading below the 800. Trading below the 200. Does that say buy? Not in our book, it doesn't. So we'll see what happens.
Yeah, and Ben, I just might say we've been going on now for about an hour and a half. So let's wrap it up in 5 minutes.
Yep, UJ's the last parry noise. That's good for me because I still got to start my dinner. All right, so here is a bonehead move you guys can see. In the UJ sell, it hit my trail, and kind of being a rookie, I jumped back in thinking it was going to drop more. Didn't get my stop loss to break even, and now I'm I don't know, like 10 pips and drawdown, no biggie. UJ does have, I think, a potential to start moving to the upside. It did not break 105.750. It was also the bottom of this channel. It's been moving up. Did have some retracement, but on the daily, we're moving right back up. I'm not looking at buying UJ probably till maybe, you know, I don't know, as soon as it shows me that it really wants to go, because, you know, right now it hasn't really made a whole lot of movement. Okay, here it is in the 4 hour. Came down, hit it twice, 105.750, couldn't break it, came up, struggled in this area, and then brought it back down. We did call the sell right in here. TDI starting to hook. So, I mean, I wouldn't mind seeing it drop 50 pips. And if it did drop 50 pips, that almost, make a nice little attractive W with a higher high over here. And then I might be looking at buying. So that's it. That's all I got, Joe.
Okay, Ben, thank you very much for that. And members, thank you very much for your participation.
And Euro NZD is hit take profit 1, folks. Just like I said, next 15-minute candle or so.
There you go, guys. Okay, everybody, take care. We'll
All right,
talk
see you guys later.